Infrastructure is a whole different space. So infrastructure, most investors are really underallocated to infrastructure, especially beneath the big maple eight. But you think about the smaller institutional investors. So many people are just learning about the space and just increasing allocations to the space. Infrastructure is a little different than real estate because it's very broad. So not just data centers on one end, you have energy production, energy storage, energy transmission. You have transportation infrastructure, airports, you have highways, you have some railways in certain instances. You have social infrastructure. In parts of the world, you can invest in hospitals, for instance. And so it's a very, very broad space.
Right.
People are just learning about it. And so capital is flowing. And capital is flowing at unprecedentedly high levels. That doesn't mean that capital will crest or decline. No, I actually think more capital is going to flow into the space. And so we're just at the beginning of that journey. Why? I mentioned the energy thing, but if you look at the public purse, i.e. the government purse, is stretched. And these are things that used to be the domain of governments exclusively in many instances, highways, airports. Purse is stretched. So government has to look for private sector participation. And we see it all around us. And so this space is going to grow and grow in terms of the demand for infrastructure investment. So sun is just rising.
Right.
Discount rates are very different. In our infrastructure book, our discount rates are double digit. And so our returns on our infrastructure portfolio, since inception, we're looking at 16, 17, 18% annualized returns for what we call essential infrastructure.
Wild, because it seems like the safest.
Right, with long-term contracts. With whether it's utility providers or governments or the like. And so, yes, there's some logic for the flow of capital that we are beginning to see in the infrastructure space. What keeps me up at night is generating those returns going forward. Because, again, when you have lots of capital, values go up. Competition goes up. Returns go down. So ensuring that we're able to deliver those returns is important. But if you step back, infrastructure might be where real estate was 30 years ago. Right? It's got a long run.
Can you just give a quick example outside of data centers, some of the infrastructure assets that you own?
So we own a company called Infinite, and they are based out in Alberta. And it's a really interesting company because it provides backup power to the province of Alberta. And so when there was energy challenges in that province in the winter, we provided the backup power because there was a lot of brownouts. And so that, resiliency comes at a fee, but we were able to provide that. And that's very meaningful. We own a portion of Silicon Ranch Corporation. That's a solar farm company based out of a number of states, headquartered in Tennessee in the USA. And it does, as the name describes, operates solar farms, but also builds solar farms. And that company, to give you a sense, when I joined Greystone, that was a $20 million investment. It's now $1 billion for us. We own ports in Europe, so in the Netherlands, in Italy, and it's as described. Also in the United States, we have about 20 million containers that flow through our ports every year. The infrastructure program has about 3,500 employees within the 9 platforms, but you can think of them like companies. They have their management teams, they have their boards, et cetera, that we own. We have Rabsha Craft, which is a platform in the Nordics, based out of Sweden, that we've expanded to Finland and to Ireland. Think wind farms, think biofuels, the spectrum of renewable energy. We're excited because we're going to expand it to more countries. We're going to have additional forms of renewable energy. And so we like that approach of having, we call them platforms, and scaling those platforms to meet needs. And so whether it's in our our transportation space through the ports or hangar facilities here. We have one at Pearson Airport here in Toronto, but also one at Winnipeg. And we've been looking at other airports across the country, or whether it's the renewable energy side. We used to own, we just sold a position at a good return in the equivalent of on-the-run locations, so service plazas in Connecticut. And so, lots of folks drive up from New York through to Boston along the seaboard. We owned a bunch of facilities there, et cetera. So that gives you a few examples for our infra portfolio.